Let's now connect with Arnab Das to get a better understanding of why there is so much of gloom and doom in global markets today. Arnab, last night's Fed communication was on expected lines. Some would argue everyone knew that the Fed would taper and they would increase the quantum of tapering. So if everyone knew that this was coming, why is there a mood of gloom and doom out there?
Well, I think the signals were a bit mixed over the course of time because when the Fed put tapering sort of on the table last year in 2013, there's a very big knock-on reaction in both global markets, emerging markets in particular, and even in U.S. markets, which caused the Fed to delay the taper until the end of last year. And something quite severe and serious happened in emerging markets this time around as well. And so I think people felt that the Fed would worry about the tightening of financial conditions around the world and its knock-on impact in the United States, and maybe go a bit slower in the pace of tapering. In addition to the global factors, there was, of course, uncertainty around the pace of the improvement in the labor market in the U.S. because the December non-farm payrolls number was not quite so strong. I think in the end, the Fed judged, we'll see how that turns out, but in my opinion, correctly judged that the momentum of the recovery, the strength of the recovery in the U.S. labor market was on track. And that generally things are on track in the U.S., and that it should go forward with the already scheduled pace of tightening. And as regards emerging markets, well, the Fed's mandate, as we've discussed before on this program, is about the United States, and so it can really only take into account the knock-on impact on other countries, even if it's most of the emerging markets around the world, through the indirect effect on the U.S. And I think here again, it's correctly judged that the U.S. recovery has enough intrinsic momentum that it should go ahead. Another factor that's also going on here, I think, is that the impact of the federal fiscal drag in the U.S. this year is going to be much less than last year, barring some unforeseen political fight about the debt ceiling and the budget again.
Right.
So I think all these things went into the mix on the Fed side, and I think the market participants were expecting that the Fed would dial down the taper, a bit too hopeful about that.
I know, but the general feeling in the market is that Fed has left the emerging markets back out in the cold. Would you say the emerging markets are now witnessing a currency-led sell-off more than anything else?
Well, I think the first part of that proposition is a little bit troubling. I mean, we can't have a situation in which there's all this hubris, as there was immediately after the crisis when emerging markets seemed to sail through the crisis. We can't think that everything is fine in emerging markets when the West is sinking, and then when the West is recovering, blame that on not entirely on policy choices within various emerging markets, but entirely on the Fed. Right? I mean, there has to be a sense of autonomy here on both sides, and I think what's happened is that there was a significant amount of macroeconomic mismanagement by many major countries in emerging markets, India included, in the wake of the crisis. They overstimulated. They didn't restrain the effect of the domestic and international stimulus. The result was an inflationary growth process in India and a credit boom in many countries that even if they didn't have big inflation, they had asset bubbles, booms in the extension of credit, property, financial assets, everything, right? Whether it was Brazil, Turkey, even surplus countries like China and Russia, and on the deficit side also South Africa and many smaller countries as well.
Right.
And so then, of course, there was this knock-on impact of the pullback of capital. Now I think that the seeds of that macroeconomic mismanagement are being harvested because emerging market countries are having to tighten quite significantly, even though their economies are slowing down, in order to address the implication of inflation through the exchange rate falls. So I think coming to your question about the currency-led sell-off, I mean, that clearly has been happening, and there's probably more to go because the Fed probably will continue to taper. And my impression is that although there's been some reduction of foreign investor allocations to emerging markets. People are still very heavily invested, and there's some uncertainty about how much those investments should be because the growth trajectory in emerging markets, not just in this cycle, but the secular trend is in doubt.
Arnab, final question. Tapering does not mean tightening, and the quantum of tapering only has gone from 5 to 15, which means at least in the short term, Fed will still follow a loose monetary policy and they will still buy bonds worth $65 billion every month, and that's a hell lot of money.
Yes, that is true, but I think the message here, and I think this is substantially what the market is responding to, the message here is that the tapering process will be completed during 2014, and that therefore we are a year or potentially less, depending on how things evolve, away from an actual shift in monetary policy. And so we go through the process of slowing down the easing. We stop, we come to the end of the tapering process, and then tightening begins, right? So the signal is that maybe the tapering will continue through 2014, and the tightening will begin in 2015. Of course, this is all uncertain, but I think many people had thought, and see, it's obviously data dependent, but many people had thought that the tightening would not come until 2015, but late 2015, rather than early 2015. So there's also this process of bringing forward this expectation of what might happen with rates. And I think this is here is where the challenge of forward guidance comes in. Right, I mean, the success that the Fed had during the course of 2013 was to convince people, as you say, that tapering is not tightening, that tapering is not a binary switch, but kind of a dial. Now they turned the dial, and then the switch comes after that, right? And so that forward guidance that says that rates will remain low for a long time, that's still there, but there's greater doubt about what the point in time is, and if anything, the market's bringing forward the pricing of that.